HUL and Tata Consumer report largely in line set of fourth quarter numbers. HUL gains with volume of about 2% in terms of growth. Tata Consumer slips as gross margins contract 420 basis points from a year ago, and the stock had already seen a bit of a run-up. In fact, we have the management of Tata Consumer joining us very shortly to discuss their numbers in detail.
Syngene shares fall as much as 10% after reporting a revenue miss in the fourth quarter. A mid-single-digit growth guidance for FY26 also leaves the street disappointed.
Persistent Systems climbs 2% on the back of a strong quarter. Constant currency revenue growth beats estimates. Margins improve. The company has also maintained its guidance for FY27.
Singapore's GIC will pick up 35% stake in Sami Hotel subsidiaries for around 750 crores. The management tells CNBC-TV18 the deal significantly reduces its debt and frees cash for growth. The stock is up by 7%.
Rallis slips nearly 5% following a weak quarter. The revenue declines 1.5% from a year ago. Pressure on export volumes and margins were major drags on the company's fourth quarter performance. You're watching us here on Chartbusters. I'm Mangalam Malu. With me, as always, Nigel D'Souza. It's earnings season, so let's get in our first management coming in on the show. We come to you live from the CNBC-TV18 Motilal Oswal studio. It's Tata Consumer, which reported a largely in line set of numbers in the fourth quarter. The EBITDA beat estimates despite gross margins compressing by 420 basis points. We have with us Sunil D'Souza, who's the MD and CEO of the company. Thanks a lot, Mr. D'Souza, for joining in right now. The most important thing that the street wants to know this time around for the next 1 year is what is your target on the margins? You've said that if tea prices were to normalize, you could see margins normalize as well. The question is, what is that normalized level? And secondly, what's your expected target for Narishco, Capital Foods and Organic India in FY26? These three numbers, if you could provide us.
So Mangalam, we had a good quarter in line with our expectations, actually slightly ahead of expectations. As to your question on forecast for FY26, double-digit revenue growth is a given. We've already come to volume growth across all our businesses this quarter. We have every single business growing on revenue as well, 17% top line, 12% organic. EBITDA margins were a bit soft. And if you look at it, overall EBITDA, I was a negative 1.1. But here's the thing. The primary compression has been because of tea prices, which have run up 25 to 30%. We've absorbed about 50% and passed on about 50% of the prices. So two things are going to happen. A is we're going to continue to take calibrated price increases as we go forward. But also as the new crop comes in, if it is normal, we expect tea prices to start coming down. That will aid margins. Just as a perspective, while we say margins are going to improve, if I took off both the cost and price increases that we took on tea this quarter, I have improved my full year by 80 bips. Our guidance is for improvement of 50 to 100 bips every year on EBITDA margins, and that doesn't change. As regard the question of starting with Narishco, about a year back, we had pressure from competitors who went in with significantly higher retail margins. No changes on consumer price, which was 10 rupees in Tata Gluco Plus. And we had to recalibrate our retail margins. We did that. And we rejigged our distribution system, etc., to the new reality. And it's coming back very strongly. Actually, we exited March at a 38% volume, 26% revenue. And for the quarter, it was 17% volume, 10% revenue. So it's back on growth. We do expect it to come to 30%. And there's no reason why. The Himalayan business, which is premium, grew by 29%. And Tata Copper, our water business, grew by 23%. So largely on track. As regards Capital Foods and Organic India, the good part is we finished the integration. We've taken synergies out. We understood the business. And I would underline that because it took us about 4 to 5 months to understand the nuances of the two businesses. Different product, different buying cycles, procurement, supply chains, marketing. And now I think we are in full control. This quarter, I think we delivered some decent numbers, 213 crores of Capital Foods, 109 on Organic India. Actually, if you take growth rates, it's 80 and 40 plus in the two businesses, but that's because we had soft quarters last year in Q4. But we feel pretty confident of delivering 30% growth going forward with a focus on distribution expansion and innovation and portfolio expansion as well.
Okay. Hi, Mr. D'Souza. Good morning and good to see you. I wanted a couple of other points. On the international business, what kind of a growth are you guiding for? On a blended basis, last year's growth was better than what the street was working with. So that's good. For this year, what will international business look like? And what is the targeted ROE? It's still in the mid-single digits. So where do you see that headed?
So the international business, the good part was for the full year, I think we delivered a 5% top line and a 21% EBIT growth. And broadly, the business is back on track. We've always maintained a mid-single digit top line and EBIT margins being accretive to India, accretive to our total business. We did deliver a 5% growth and EBIT margins were 300 bips higher than where we delivered the rest of the business to be. So it's fulfilling what it's supposed to be. The UK business is a standout. We're number 2 tea business now and on a very strong margin profile and overall structural balance. Canada, of course, has come back. It's always the jewel in the crown, very steady. This thing. The US business was a bit of topsy-turvy with the coffee prices, etc. I think that's come back on track. We had 2% volume, 4% revenue growth, and we've announced a price increase starting June with the coffee prices, and therefore even the margins will come back. So international business, again, mid-single digit top line and EBIT margins accretive to the total business is what we would guide for. On the ROE basis, it's a choice to make. I could stand still on acquisitions, and therefore, as I grow my top line and EBITDA ahead of margins, I will improve EBITDA, my ROE, ROC margins. In fact, before we did the acquisitions, if I'm not mistaken, 4 years, we had gone up about 400 to 500 bips on ROC. So we could do that. But we are geared for the longer term. We will grow organically and inorganically while making sure we are focused on both top line and profitability.
All right, we take that point. And final question before we let you go, Mr. D'Souza. One is the target share of revenue that you expect from new products. You launched 41 in the last financial year, 41 in the previous financial year as well. So what proportion of your revenue is currently coming from products launched in the last 2 years? What's the target here? And secondly, there is a slowdown in Tata Starbucks. Do you still maintain targets of 1,000 stores? And have you scaled back on the pace at which you are investing in Tata Starbucks? Comment on Tata Starbucks as well as innovation in products.
So on innovation in products, Mangalam, innovation is key to any FMCG business. And we do aim to be in the top tier of innovation in the food and beverage and FMCG space. Last year, FY24, we delivered 5% plus. FY25, we delivered 5.2. We aim to continue that same trajectory going forward. So you could expect one launch every week as we go forward. That doesn't change. In fact, we will try and accelerate that, if anything. On the Starbucks business, we remain focused on the long-term guidance of 1,000 outlets by FY28 doesn't change. We remain committed to that. It's just that I think I said this earlier also, we will calibrate depending on market conditions. The simple thing that I use is a quote from one of my bosses earlier. Emerging markets is a snake in a pipe. Directionally, it's going up, but it will yo-yo up and down while moving up in that direction. And that's where we are. The good part is I think we've started to see business coming back a bit. Same-store sales growth was, I would say, low double-digit negative when we started off FY25. By the time we exited the quarter, we are into almost zero, touching distance of zero on same-store sales growth. We had tempered outlets a bit, but we remain confident of hitting the 1,000 outlets by FY28.
Okay, all right, Mr. D'Souza. Appreciate you joining in. Thanks a lot for giving us those details. We look forward to having a chat with you as the year progresses. For the time being, we'll take that guidance on board. The stock is down close to around 1.5%, but actually it's recovered considerably from the low point of the day. Well, let's slip into a short break. When we come back, we'll focus on the technicals of the market. Sachidanand Uttekar will be joining in. Welcome back. We'll keep an eye out on a few stocks on the screen. VIP, yesterday the stock had seen a good recovery from the low point of the day. That one has continued with that, so volume spike on that one And the other stock that's surging away, which we pointed out earlier as well, is Whirlpool. Now it's up close to around 5.5%. The international parent, that's Whirlpool Corporation, came out with its set of numbers. And the read-through is that India business could have done quite well. So that's the reason why that one is up close to around 5.5%. And Dalmia Bharat continues to hold strong with a gain of close to around 3.5%. Sachidanand Utekar joins us on the show. Hi, Sachi. Good morning. Good to see you. When markets in a bit of a consolidated mode just for yesterday as well as today, moving in that band of around 24,000 to around 24,350 or thereabouts. How would you read this? Would you look to buy into this mild dip?
Good morning, Nigel. Good morning, Mangalam. I think clearly the trend has been on the bullish side. What we are observing today is a mild consolidation. And as you rightly said, I think 24,200, 240 looks like a stable base. But on the higher side, there is resistance at 24,440 at least for the day. But overall, we are expecting that this particular rally should continue towards 24,500, 560 in the coming weeks. So I think it's better to be on the long side. The decline is very healthy so far. That 24,240 mark has been respected well. So keeping a stop loss somewhere close to around 24,160 on a closing basis, some long positions can be maintained. When we look at Nifty Bank as well, 55,000 support has been very strong and very significant. Even here, until unless we don't see a closing below the 5-day or the 5-day exponential moving average support, which is placed somewhere close to around 54,960 thereabouts. I think the trend momentum would still continue to be on the positive side. So even Nifty Bank, I think, has come to a stage wherein some long positions can be deployed. We are expecting that in the coming series, Nifty Bank may scale towards 57,000, 57,300. When we look at stocks, there are ample of stocks which are hitting our radar now. If you look at Tata Power, this is something wherein the stock has started trending above its 200-day exponential moving average after almost 4 months. If you look at its 50-week exponential moving average support, which was placed at around 388, has been negotiated well. And if you look at the weekly RSI, it has started giving a breakout above that 50 mark. Even on the price scale, it looks like a inverse head and shoulder formation, exhibiting a pattern target at around 436, and that's why we are recommending building long positions for the coming series. Trading target is placed somewhere close to around 412. Second target would be 436. The stop loss can be placed at around 388 on a closing basis, and long positions can be deployed in Tata Power. The second stock which has hit our radar is Cipla. Now, the entire pharma pack has been doing really well. We have already seen very sharp pullback moves here. But if you look at Cipla's performance for the last couple of trading sessions, we have seen consistent built up on the long side. If you look at the weekly pattern, it looks like a classic V pattern breakout. Even here, the daily ADX has just turned on the positive side. It's giving a breakout at around 25 level, which is a good sign of momentum. So we are expecting that this particular move may extend towards 1600, followed by 1670. And that's why we are recommending building long positions in Cipla in the May futures. One should keep a stop loss at around 1540 on a closing basis.
Okay. All right. Thanks a lot for that, Sachidanand. Well, let's shift focus to our special segment where we get you a few ideas for profit from Moneycontrol Pro. Sachin Pal of Moneycontrol.com joins us to talk about a stock that he's tracking closely. Sachin?
Maharashtra-based country liquor manufacturer GM Breweries posted a solid operational performance in the final quarter of FY25. In Q4 of FY25, the company reported a top line of almost 169 crores, which represents a growth of 6% year-on-year. Margins also expanded by 60 basis points at the operating level to 24.5% in the quarter gone by, thanks to benign operating costs. However, the operating costs, especially on the raw material front, is expected to be challenging going into FY26 due to decline in sugar production at the all India level. The sugarcane production in India is anticipated to decline almost 20% year-on-year due to unfavorable weather conditions. So that should have a bearing on the margins for the company going into FY26. That being said, the company has a very strong balance sheet to navigate the current set of headwinds and is currently sitting on cash equivalents almost 600 crores. And also the company trades a reasonable valuation of around 10 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
All right, well, let's slip into a short break. You come back, we'll continue to focus on markets and stocks that are moving around. Well, let's address another story that's coming in. Sources tell CNBC-TV18 that the Indian Commerce Ministry officials will be visiting the US, UK and other major trade partners to discuss the terms of the FTA. Abhimanyu joins us, all those latest details. Abhimanyu?
Global trade will continue to remain in focus as several Indian officials are going to visit various countries in the next few days, ranging from the United States to the European Union, the United Kingdom, and even an EFTA country. Now, an Indian negotiating team led by Chief Negotiator Rajesh Agrawal, who's an additional secretary with the Department of Commerce, is already in the United States, and they are going to hold talks with the American side before formally launching negotiations for a bilateral trade agreement between both the countries. Now, already the terms of reference have been finalized with 19 chapters, which include issues like goods, rules of origin and regulations. It remains to be seen how talks are going to pan out. Also, Piyush Goyal, India's Commerce and Industry Minister, is going to leave for a 5-day visit on the 27th of April. He's slated to go to London, Oslo and Brussels, while India is already engaged in FTA negotiations with EU and the UK. It's awaiting implementation of the FTA which India had signed with EFTA countries, since it has to be ratified by respective parliaments of different member countries before it completely gets implemented. Also, the 11th round of India-EU FTA talks are slated to be held in New Delhi from the 12th to the 16th of May, and an Indian team is expected to also go to Brussels next week for pre-negotiation talks with the European Union. Now, both the sides may explore the possibility of an early harvest agreement similar to what India had signed with Australia.
Thanks a lot for that, Abhimanyu. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.